How are you doing, everybody? I'm Michael from Tradepool, and today we're going to talk about one of my favorite indicators in order to find the top or the bottom, basically find a reverse strategy like buying the dip or selling the top. Before we'll dive into that and get to know this indicator, and I will show you exactly how I use it for the last 15 years, let's talk a little bit about indicators in general, right? Indicators are basically tools to help us as traders or as analysts to understand where the market is shifting. Are we in a buy the dip mode, like oversold or overbought situation? And of course, there are plenty of indicators you can use, thousands literally. Every day, there are new guys that will create a new indicators. But basically, the most important thing you need to remember, the indicators are coming from the chart, right? So either by price or by volume. So what you need to understand first is how to read the chart, the naked chart, right? The momentum, the price, the high, low, bid, ask, and the volume. Afterwards, you will be able to use the indicators just to confirm what you already understood from the chart. So that's probably the most important tip I can give you guys. Stick to the chart first and then go to the indicators, and not the opposite around. It's super easy to fall in love with indicators because it's very visual, right? So if RSI, for example, reaching 80 or 70, basically means that we are in an overbought mode. But the most important thing is understanding the momentum that's coming from the chart itself and not the indicator. Once you understood the chart, it will be easier to apply the indicator and just give you one more confirmation of what you already understood. So let's dive right to the chart. I'm looking at Tesla right now. Let me share my screen and we will talk a little bit about it and understand how to use the MACD and what it's all about. So right now, you're looking at TSLA on an hourly chart. That's a classic chart, right? A lot of momentum, very volatile asset, Tesla, of course. And what I want to bring in is the indicator. You will have it in any platform that you will use, doesn't matter which one, called MACD, and it basically means moving average conversion divergence, right? Once I applied it, let me add some other stuff that you're usually going to see when you apply it for the first time, at least. I'm not using them, but just it will be easier for you to just understand what you are looking at. So first of all, you can see two lines crossing each other from time to time. You can see the Instagram as well and the zero line. Specifically me, I've been trading for the last 15, 16 years and using that the same old method basically. And I'm not using the Instagram or the zero line. I only use those two lines that we will talk about right now. So once you apply it for the first time, in most cases, you will see it just like this. What I'll do right now is just remove it because I'm not using those two. So not zero line, not Instagram. So what are we looking at right now? The MACD is basically moving average. So it calculates the close of every bar. In this case, we're looking at a 1 hourly chart, which means just go backwards and calculate the average of the close. How many of those candles? It's basically here. So you have the numbers right here. The MACD itself is 12 EMA minus 26 EMA. The average between them, that will be the MACD. And as you can see, that's the blue light line. The other one is the signal line. That's the 9 EMA, exponential moving average. And that's the red line that you can see right here. So basically, the MACD coming from the chart, calculated numbers from the chart, and just show it to you visually, much easier to look at it, obviously. What we're looking at, or what we want to see, is what we call the diversion, negative or positive diversion between what the chart is showing us and what the MACD is showing us. If I'm searching for a negative diversion, it will be that the chart is moving to the upside you can see higher highs, creating new higher highs all the time. But look at the MACD. The MACD creating new lower high. Instead of continued with the same pattern that the chart is showing us, the MACD will show us a decrease of the momentum coming from the buyers. So basically the buyers are getting weaker, and that means that the sellers might be able to take control and push the price to the downside. So this is what we're looking at and looking for when it comes to the MACD. We're trying to see negative correlation between what the chart will show us and what the MACD itself will show us as well. So you can see it applied a couple of times here, right? The price going higher, creating new highs, but look at the MACD while it creates new lower highs, right? This low is lower than the previous one. So this is a signal, basically one signal that you can see a negative correlation between the chart and the MACD. Same happens a bit later. We reach to a new high. The MACD, instead of creating also a new high like the chart made, we can see that it's a lower high than the previous one, right? So price going up while MACD is dropping down. That's a great place to understand. And again, you only understand the chart first, and then apply the indicator. But by looking at the MACD in the chart, you can understand that the buyers are getting weaker. The momentum of the buyers is getting weaker, and that means that in most cases, the sellers can get into the action and basically drop the price down. So the same happened like 2-3 weeks afterwards. Look at this high of the MACD, and the chart obviously made a new high. But later on, when we created a new high again, basically higher highs, then the MACD couldn't make it and made a new lower high. So again, a negative deviation or diversion between the chart and the MACD that eventually led to this crazy move to the downside, all the way from 300 to 210. So this is a great example of a negative diversion. And the funny thing about it, if I take let's say a random, just the list of the S&P, it doesn't have to be a specific stock that I'm, analyzed it before this lesson or whatever. Any type of company, any type of asset that I would click on and look at it, you will see this negative or positive diversion, right? Look at this, for example, KIM, just the first one in line in the S&P 500 that I have on this list. And you can easily see this negative deviation, right? Diversion. So for example, the price is going up. I'm looking at the highs while the price is increasing. So this is one high. And you can see we created a new higher high. But look at the MACD, high, but the one afterwards is basically lower one. So lower highs while the price creating higher highs. I'm not talking about the signal yet, the drop and how big it is or something like that. Just the understanding that the market, that the chart basically, and the indicator creating a different move. A little bit afterwards, the price creating new highs, right? A new high, and basically the MACD is still below the previous high. In that case, afterwards, we saw this drop, nice drop to the downside from 21 all the way to 1980. After that drop, you can see that the MACD and the price created a positive divergence. Look at this, the price drop. So we're looking at the lows, right? Price is going up, we're looking at the highs. Price is going down, we're looking at the lows. You can see that the price creating new lower lows, while the MACD creating new higher lows, right? Instead of continuing the same pattern that the chart did, we're basically watching the sellers getting weaker. The momentum of the sellers are getting weaker, and basically buyers can come in and push the price high. And this is exactly what they did. It took it a little bit time, but then they created that move to the upside. Obviously, like we just saw on Tesla or KIM, or again, if I'll take the S&P, doesn't matter which stock I will look at, let's say STX, you name it, you will see those negative and positive diversions. And basically, the idea is to understand it first so the eye can easily adapt to. And right now, you can see it also, the price going up to higher highs, pretty easily to discover that, the MACD creating higher lows, right? Not continuing with the same pattern of the chart. You can see it also to higher highs, or this is like a little bit lower than what we saw, for example, in the previous examples, right? This is kind of close, but again, the price creating new highs and dropping down. And you can see also a new high right here, while the MACD is creating a lower high as well. And the price dropping down, creating new lower lows. This is a positive diversion. And the MACD, look at it. One low, the second low is higher than the previous one. So it creates basically this positive diversion that implement that the price might go to the upside, basically the sellers getting weaker, which means that buyers can be a little bit more aggressive and push the price to the upside again. Obviously, sometimes you will have crazy moves afterwards, like this one from 67 all the way down to 57. Sometimes you will have smaller moves like this from 67 dropping to 66, right? So there are a lot to understand more about how to take a trade, for example, like a buy the dip or a sell in the top mode. But basically, once you have this idea that you want to short a stock, for example, and it did have a nice momentum move to the upside and reached a major, let's say, a resistance level, and you add in that to that the volume as well, now you can use the MACD to confirm it and basically give you another V in your checklist in order to go short, or obviously the opposite if you want to buy the dip or after a nice pullback. So that's the idea. I've been using the MACD for... So that's the idea of using the MACD. I've been using it for many, many years. By far the best indicator I ever used. And I'm using it for a 1 minute chart, hourly chart, and also on a weekly and 4 hour. You can basically use it for any type of time frame. But the most important thing, like I said in the beginning, you got to understand the chart first and only then go to the MACD and apply. If you will start taking trades just because you saw a negative or a positive diversion, it won't last long, because obviously there are times that you will see that negative diversions or a different correlation, basically, this correlation between those, but you won't have enough sellers to come in and drop the price. You need it to be on a certain liquidity level, so a major resistance, for example, if you want to sell the top. So those kind of elements or parameters that you want to add to your decision making, and not just base it on the MACD. Although it's an amazing tool, and once you will start using it and your eye will get used to where are those negative or positive diversions, you will definitely see an increase in your trading on the technical level and the analyst side, obviously. So that's it. Obviously, if you have any questions, feel free to drop them to my email, michael@traderpool.com. And make sure you check us out. We fund stock traders. So if you have lack of capital and you want to trade stocks, feel free to join us. We have 14 days free trial. Take care, guys. Bye.